You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose, and I think this is our 7th day of giving a free trade every single day. We started with 100 likes for a free trade. Yesterday we changed it to 150, and we got that 150. I think after the live, 35% of you gave a like while we were live. So let's try to get that above. Let's try to get it to 50%. Give a like. We get over 150 likes. I'm going to do a whole bunch of research this weekend, deliver you a wing dinger of a trade come Monday. So thank you guys all for joining. Really appreciate it. My name is Jonathan Rose. I've done nothing but trade my entire career. I grew up on the East Coast. I moved to Chicago in 1997 because I knew that I wanted to be on the floor of the exchanges. It's something that I've always dreamed about. I started at the Chicago Mercantile Exchange. Then I was at the Chicago Board of Trade. In 2011, I started working at the Chicago Board Options Exchange. And that's really where I understood or learned how to trade options and how to value options. I think that stock and options are really the same thing. Options are literally just a derivative of stock. If a stock's at 10 and you buy the 12 calls, you're just buying stock at 12. Why would you want to buy stock at 12 when it's trading at 10? Because it's your option. At expiration, if the stock closes at 11, you're not long at 12. You don't have to be. You just lose your principal, whatever you paid for that option. But if the stock's at 13, you're long from 12. Your option's worth $1. So that's what we do, guys. I really want to simplify options for you. We talk a lot about, unusual options activity, UOA. That's what I'm going to focus on today. I got the chat open. Thank you guys all for joining. Yes, the trades have been really, really good. Oh, I got a comment that JR is sharing incorrect information. Recent check of InvestorPlace challenge showed a price of $4.99, not the $100 JR keeps saying. Worth the price? If you click on it, I don't think it's $500. The challenge, and I'll post the challenges on there, investorplace.com/challenge 2025. Go through the whole process. It is not $4.99 to get into the challenge. Right, Chris Warder? Unless Chris Warder wants to correct me, but it's definitely not. I think you can get in for under $100 exactly like I've been saying. So thanks for sharing that, although I don't think it's correct, but okay. All right. Ready? We're going to move on to the slide deck. Here we go. All right, guys. Important. When you have an option, there are 3 ways to manage your options position. That's it. There are only 3 ways to manage your options position. And here they are. Get out. If you're long those 12 calls, get out. You bought them for 50 cents and trading 70 cents, get out of your trade. You're done. Easy peasy lemon squeezy, right? The next thing you can do is you can roll your position into a vertical spread. I'm going to explain that on the next slide because that's exactly what we're doing with one of our open lithium positions. And then finally, you can scalp gamma. I have lots of videos on my YouTube channel about scalping gamma. The trick with gamma, a lot of people get confused with gamma. We all know what theta is. Theta is time. The opposite of theta is gamma. If you're a long option holders scalp gamma in order to make back that lost theta. We'll talk about that more in our community. But here we go. Here's an example. And I'm going to show you an example in our lithium position. Now, it's an open trade, but it's fine because it's all hedged and covered. So let me explain to you exactly what we're doing with ALB. And again, we shared SGML a couple of days ago. SGML is a lithium name. It's the exact same trade as ALB. So look, here's ALB. Now, I'm not a technician or, But I can tell you what a lot of technicians will also tell you. 100 and 200 period moving average coming together. It looks like they're rolling over, getting stronger. Higher lows, higher highs, looking to break out. We can do all that nonsense too. But that's not why we're long lithium. We're long lithium because we were seeing gargantuan, unusual options activity. So all that I said about that chart, I don't believe that. I don't care about that. But I do believe ALB is going higher. So here's how we're trading it. Okay. Let me pull up my pen right here. Yeah, it's not $4.99. If you're having any issues with the challenge, it's under $100 to get in. That is 100%. And please just email support@masterstintrading if that's not true in any way. Okay, let me explain to you what we did. Enter, enter. Okay, so we entered this trade. Now remember, 85 calls and 95 calls. All we are is we're long stock from 85 and we're long stock from 95. That's it. That's all we're doing. Now, when I did these trades to hedge or to cover, I'm putting things into a vertical spread. So now we are long stock from 85, long stock from 95, long from 85, long from 95. And what are we? We're short from 100, 2 times. Okay? The most that we can make here is 5. The most that we can make here is 15. Equals 20. So this position, guys, what I've done right here, this is perfect position management. We're down to 40 cents of risk. So right now, we have 40 cents of risk. If you have a 1 lot, that's $40. If you have a 10 lot, it's $400. If ALB closes above 100 before October, which I think it's going to do, I'm extremely bullish lithium. Hey, SGML, just checking in. How are you? Just pulling up ALB. Because this is trade management, guys. This is what we want. We want to risk a little to make a bunch. October. Now, here's a little cheat sheet for you guys. Do you know that you can use delta for the probability of your position getting in the money? So if I add delta here, okay, delta of the 100s is 21. So the market's pricing in a 21% chance of this position ending up in the money. But if it does and it rallies up there, here's what we make. If ALB closes above 100, every $40 turns into $2,000. Every $400 turns into $20,000. This is optionality, and these are the positions we strive for to get into our portfolio. Also, but please understand, this is position management. We could have just taken off the position, locked in 200% profit or so, but we are going after those big fish. Does that make sense, guys? Does that make sense why we rolled this into a vertical spread? We rolled this to keep that optionality. We are short from 100. Last trade, 88. So if this stock continues to go higher, great, great. The only problem is if it gets above 100, we don't participate in any of that, but who cares? We just risked $40 to make $2,000. Okay? If you go onto YouTube too, guys, please search vertical spreads. You'll find videos that explain vertical spreads. SGML we shared the other day. Here's what I want to do with these free trades, guys. A lot of you guys are making money out there with these free trades. I freaking love it. I want you to lock in profit when you see opportunity. because I want you to make $100. Get yourself into the InvestorPlace.com/challenge 2025. When you make 2K, you're going to join advance notice and join the team. And then when you start making more money, you'll join all access. So that's the play. SGML, if you're up money, DVN, QUBT, QQQ, lock in money. Let's grow that account so we can get you inside the Discord. Okay? That's the trust. Make money first. Join the community with that money that you make from those trades. So that's my, I don't give advice, guys, but that's my standing order for all these trades. They are meant so you make money to join the community even before you join the community. How does that sound? All access is 5K. We got a little testimonial this morning I want to share. I've learned a lot about trading other option strategies this last month amid selective over trades. I've had good wins. I also have good losses in FCX. So given the value added, I've upgraded to AA and I'm looking forward to learning more strategies. Thank you to all the contributors of the channel. It's a very happy leopard. And this leopard can change his spots. So thank you very much for sharing. Welcome to All Access. I'm super excited that you're with us. Okay, here's our advanced notice tool. Advanced notice tool, overnight, we saw some LQDA, BMNR, CIFR, UPST, qubits, the same kind of names. These are the names, guys, that are really, really moving. That's why we follow unusual option activity. There was a cool conversation in our All Access this morning about biotechs, looking to potentially get long a biotech ETF. But my comment, wait, don't invest money just to get long because you got a hunch or because of technical analysis. What we want to do is we want to wait until we see that gnarly, unusual option activity come in on a biotech that's got under a $5 billion market cap. That's our tell that the next trade in biotechs is here. Okay? Here's what I want to do, guys. We're going to share a trade right now. We've been making money on the trades that we've shared. We got any bad trades yet? The trades that we've been sharing have been really, really good. Something to notice about the trades too, they are a fixed amount of risk. You can never lose more. So it's not like these trades are saying, hey guys, get in there and risk 5K. Fuck that. A lot of these trades we can risk under $100. It's a great way to learn options. It's a great way to paper trade too. So here we go. I was saying earlier, I'm bullish lithium, right? I am. Well, whenever we make a trade, there needs to be a reason. And the reason cannot be technical analysis. Because if you buy something or get long because of a head and shoulders, I promise you, I can show you 1,000 of the exact same charts on different stocks. And unless you want to buy all those 1,000, well, I want to do that so you realize maybe that trade is not as special as you might think it is. So what do? We look for divergences. And we see a divergence right here. And this divergence is in SQM, a lithium company, right? SGML, I think you did well with SGML. Get in, get out, cover that trade easily enough for the challenge. Well, SQM as well. SQM is very correlated to the ETF LIT, L-I-T. Now, why is LIT right here, the aqua, outperforming the white? Well, the reason it's doing that is because LIT has a lot of illiquid Chinese names that are getting marked to market that we can't trade because they're not traded in the US. This does tell me that SQM is really inexpensive. SQM plus ALB comprise close to 15% of LIT. So SQM is actually part of SQM. Eddie, what's up, buddy? So now I'm going to pull up SQM. I am bullish ALB. I am bullish lithium. I am bullish SQM. SQM, let's go out in November, for a little bit more time. And the SQM, yeah, be careful with liquidity. Work limit orders. There's going to be better liquidity in October. These don't suck. I really rather November, guys, but I don't want you to overpay. There's not a ton of liquidity. There's better liquidity out in January. I actually don't mind a covered call with these January 57 halves. Mid-market for $1.30. You could buy the stock SQM 44.50, and at the same time sell the 57 halves in January for $1.30. Nice trade. In it for 112 days. We avoid that disastrous December expiration that we don't want to own stocks. I am bullish SQM. I looked in November to find out some long options, but I didn't like the liquidity. January's got better liquidity. So I like buying the stock in SQM 44.50 and at the same time looking to sell those upside calls at 57 half. Hopefully that makes sense, guys. If it doesn't make sense at all, this video lives on YouTube. Watch it back. Watch it back. Feel free to ask questions in the comments. I'm always going to reply to your questions. Okay? Thank you so much for joining us as well. This has been a lot of fun sharing all these trades. We're going 150, but I don't think it's going to be difficult getting there. Okay? Thanks for watching, guys. Have the most awesome weekend. Everybody in All Access, you guys hang tight. We'll be right back. Thanks for watching.